Just as the health in case of humans is being determined by a health report, health in case of the companies is being determined by a financial statement known as balance sheet. So hey guys, if you are new to my channel, my name is Zaman, and in my channel I simplify basic financial steps, thus enabling you to have a better understanding of finance and accounting related concepts as well. Now without wasting any further time, let's just start today's video. So in today's video we would be looking into one of the most important and the most crucial financial statement in accounting, which is known as balance sheet. So what is a balance sheet? So balance sheet is a complete in detail representation of company's asset and liabilities. Number two, balance sheet also states us the mode of the finance of the company, like whether the company has been financed through equity or debt. Now moving on to the balance sheet equation, which is asset equal to liabilities plus equity. Just note that the value of assets will be equal to that of the liabilities plus equity. It also helps us evaluating the fact that the balance sheet is correct and is free of any errors. So now let us discuss the items that come under balance sheet. So first are assets. So assets refer to those resources that provide economic benefit to the business in future. So there are two types of assets, which is current assets and non-current assets. So current assets refer to those short-term assets that can be converted into cash within a year. For example, cash in bank. So cash in bank refers to the amount of money, liquid money, that the business holds with them or in their bank account. Number two are account receivable. So account receivable refers to the money that the customer owes to a business, or that the money that the business is about to receive from their customers. The third is inventory. Inventories refer to the stock that a business holds or the goods which are available for sale for a business. So this is inventory, and then the total of the current assets, which means that all the item head that comes under current assets is being added. Now moving on to the non-current assets. Non-current assets refer to those long-term investments that generates an income for the business beyond a period of year. For example, money invested in plant, property and equipment. We know that the money that has been invested into land, or be it building or a property, these types of investments generally gives an return beyond a period of year. And the same is in case of the intangible assets like goodwill, patents and copyrights and trademarks. So afterwards, in the same way like we did in the current assets, the total of the non-current assets is being added as well, and then both the current assets and non-current assets is being added, which gives us the total of the assets in a whole. Now moving on to the liabilities and equity. So this side shows that how the assets are being financed either by borrowing or by equity. Now liability are generally of two types, which is current liabilities and non-current liabilities. So current liabilities refer to those short-term obligations that are to be paid within a year. For example, accounts payable. So accounts payables refer to the money that a business owes to their suppliers. And number two are short-term loans. So short-term loans refer to those loans that needs to be repaid within a year. Afterwards, just as we did with the assets, the total of the current liabilities is also being done. And now moving on to the non-current liabilities. Now non-current liabilities refer to those financial obligations that extend beyond a period of year. For example, a long-term loan that a business has taken. Now moving on to equity. So equity refers to the owner's share in the business. So equity comprises of two components, which is share capital and retained earnings. So share capital refer to the money that is being invested by shareholders, and retained earnings refers to the amount of profit that a company retains with it instead of distributing it as a dividend. And then at last, the total of the equity and current and non-current liability is being done, and both the assets and the liability side plus equity has to be equal, which states that the balance sheet is correct and free of errors. So that's all with the today's video, guys, and if you want to learn more about finance, then you can check out my previous videos. I've put the link down below in the description. Till then, see ya, stay tuned.